We're joined now by CNBC tech reporter Steve Kovac and Big Technology's Alex Kantrowitz, a CNBC contributor, of course. Mr. Kovac, I'll come to you first. Oh, how things change in perception. We're obsessing over all this money being spent by the hyperscalers, and Apple's like, wait, we haven't spent that much. We haven't spent that much.
They are saying that, but they are saying, Scott, that they are spending more than they ever have before. And I'm glad we're talking about this now because this kind of got overlooked during earnings. We were getting so excited about that boost in iPhone sales. But take a look at the operating expenditures. Now, on the earnings call just a couple of weeks ago, Kevin Perek, he's the CFO of Apple, he was talking a lot about the increase in OpEx and tied that to research and development and more specifically artificial intelligence. It was up 11% year over year for that September quarter, and it's going to jump up to 20% in the December quarter now. Again, all of that for AI. And by the way, when we talk about CapEx, though, and the data center part of the equation, they are building their own servers for that, but they're not spending tens of thousands of dollars on NVIDIA chips. Apple Intelligence runs on the same chips that power MacBook and Mac computers. So they're able to do that for, let's call it, hundreds of dollars per chip instead of tens of thousands of dollars per chip. And we also know that they're talking to Gemini, potentially other partners, Google, that is, Google's Gemini product, to run on those servers more efficiently than perhaps they can run on these big, giant data centers that all the others are spending so much on, Scott.
I mean, we're showing, let's put the wall back up, guys, if you could, please, because, I mean, it really tells the whole story. You look at the total spend of $101 billion, and there's Apple all the way on the right, $3.25 billion.
Yep.
AK, what do you make of that?
Well, they are spending more, but I don't quite know what they're getting for the money. And also, I do think it's a liability. If Apple's strategy is, hey, we're not going to try to develop AI internally and we're just going to buy our AI from Google, you're really trusting your destiny when it comes to AI to a different company. I don't think that's a wise move. We see that Microsoft, which has just freed itself up from OpenAI's restrictions that it wasn't able to go out and try to pursue artificial general intelligence or superintelligence, really what that means is powerful AI. The second they signed that deal, now the head of Microsoft AI, Mustafa Suleyman, is talking about pursuing superintelligence because, as he put it to me recently, if you're a $3 trillion company, you don't want to leave this very important technology to someone else. Now, Apple is a $4 trillion company. I think it makes sense to invest to try to make this work. For whatever reason, they haven't gone in as far as the others have. And for now, that looks great. But the question is what happens over time.
I mean, Steve, I guess they have arguably the best balance sheet of the group.
Easily.
Right? I mean, they're sitting on like
about 200
Mount Everest of cash, right?
Yeah, about $200 billion. And look, we make this joke all the time. Before we even started talking about AI, their biggest acquisition is always their own stock through buybacks and so forth. They're not an acquisitive company, at least in a significant way. They buy small companies. But I want to go back to what Alex was saying and all this development about AGI or superintelligence or whatever you call it. That is very nebulous, and that is not an area Apple likes to play in. We already know, let's go back to what this relationship with Google. We already know that's been an enormously successful partnership for benefiting Apple. They don't have to build their own search engine. They collect $20 billion or more per year from Google. That drives margins in their services business. And also, like, looking back at just the product side of things, there's no one but really ChatGPT and OpenAI that has created an AI product that tens or hundreds of millions of people want to use every day. Apple hasn't done it. None of these hyperscalers have done it. Microsoft hasn't done it yet, even though they're trying to. And so using another technology until this path becomes sort of more clear, not AGI, not superintelligence, whatever you want to call it, seems like a smarter move in the meantime, and they can do it in a less capital-intensive way. That doesn't mean they're slowing down. Again, I point back to the R&D spend that's going up enormously. And by the way, the CFO also said on the call, they're able to do that because their margins continue to expand because of the strength of the services business. So they're able to spend a lot more on those operating expenditures and R&D. Will something come out of it? Who knows? But we don't know if anything's going to come out of this enormous spending from all these other guys, too.
And since, AK, we're talking about all this spending, we might as well talk about the growing level of debt. I mean, you can't talk about one without talking about the other now. Whether it's an issue or not isn't even really the question, I don't think. It's just how this big build-out is being financed. What do you make of that?
I think it's dangerous. I think it's absolutely dangerous. And there are certain very legitimate questions that have been raised about whether all of this spending and now borrowing is going to pay off. And all of Silicon Valley is chasing this dream of building this powerful AI technology. I mean, I use the terms AGI and superintelligence. They really are marketing terms. What they're trying to do is just build large language models, this form of generative AI that we have today, that are super capable of finding things for you, capable of making transactions for you, capable of maybe doing your job for you. And so nobody really wants to be left out of that. And I do think we're seeing some extreme financial movements on some of these tech companies taking on a lot of debt, and that is dangerous, as we know. So those that are raising the alarm, I think, are right in their concern on that front.